Will you really make money in the property market in Kenya? Rental yield used to be about 6% average. The high-end market, the very high-end markets like Runda, Karen, will experience less than 6%. But the Kawaida market, the Kilimani, the rental yield by annum has been 6% for many years, at least for over a decade, it was 6%.
I'm a Kilimani Kileleshwa Westland specialist.
Yes.
So within my neighborhood, I
Yeah.
can say it's between 6 million for the one bedrooms to around 9 million there.
Yeah. Kenya, I'm thinking this is a land of, of milk and honey. The grass is green on this side. So we are having. Will you really make money in the property market of Kenya? Welcome to KITO's podcast. My name is Eric Gitonga, and with me is Collins Baliat, one of the partners in the business, a consultant, a guru in Airbnb, Airbnb investments and all. So, karibu.
Sound.
So where do we start today? I just want us to have an easy discussion that people can get some answers on some of the questions they've been asking. Where do we start today?
Okay, actually, one of the foremost questions people ask.
Yes.
And this is due to what they're seeing out
Yes.
there.
Yeah.
When you take a drive through the Nairobi environs and you check, you won't miss one or two construction that is going on.
Yeah.
So one of the foremost questions people ask,
yes,
will the supply overpower the demand?
Yeah.
And the second question, because people are eagerly looking to invest,
Yes.
it will be how would their returns look like? Because at the end of the day, you have to earn a passive income, or maybe you want to go into real estate investments.
Yes.
Yeah.
I've been getting similar questions, and guys have been like, hey, in every radius of 1 kilometer, there are several constructions and drilling. And this is something that people are discussing online about all the drilling that is going on. But the land for doing these constructions is diminishing, isn't it?
Yeah.
It's diminishing. As we build, it's diminishing. Now, I guess at some point, the supply will decrease as well. At least in the hearts of Kilimani, Kileleshwa, Lavington, so people who start going to the outskirts. Okay, that's a good thing to note. I think that's for me what I've told.
Yeah. At the same time, the question people usually ask, what is the uptake?
Yes.
Let's say the construction ends.
Yes.
What would the uptake in terms of rental look like?
Yeah.
At the same time, if let's say someone wants to offset the investment,
yes,
will the market be ready
to take up the investment?
Yeah.
Yes, there's a rental bit and there's a sales bit. I hear you. Yeah. I think the question I've had also is, who is buying these properties? That's another question you had. Very important. Who is buying these properties? And I'll share my experience, you share your experience. I think I see a lot of we take a note, there are a lot of foreigners, foreigners who are non-Kenyan, people who are not Kenyans buying into the market from all the way from, especially in Africa, quite a number of African countries that are investing in Kenya. Which other guys have you noticed buying?
Having been in the space of Airbnb, I've been able to have a better look. When it comes to, let's say, the 1 and the 2 bedrooms, you find most of the renters, especially it's the Airbnb people who are looking to set up a short-term rentals, who are actually driving the demand for the rental.
Okay.
Because
Nairobi, this Airbnb people,
and this most of the time you find that most of these Airbnb people are foreigners and also Kenyans who are, let's say, coming to Nairobi. They have a meeting, conference, and so on.
And who's doing the setup?
Now, when it comes to
this is your field, so I have.
So it's a mixture.
Yeah.
Actually, there are some buyers who immediately they buy the properties, they furnish them and offer it as a short-term rentals.
Yes.
At the same time, there are Kenyans who rent the place, but with the aim of setting up an Airbnb.
Okay.
Yeah.
Okay. Just something interesting. What's the ratio? Diaspora Kenyans, basically Kenyans, both diaspora and local, who are doing Airbnb compared to the foreigners out there. It would be good to know so that we know how foreigners are really investing here.
Yeah. So at the same time, there's a mixture because, as you had said, Nairobi, it's a busy hub and it's an attractive hub whereby other people around the world are looking to come to the country. So you may find they are investing in the place. Others decide to stay. Others decide to rent the places out. And also others decide to furnish them and offer it as short-term rentals. Whenever they're not in the country, they can give it out. And when they're in the country, they can use the apartment. So it's actually a mix. It's a diverse mixture.
It's a diverse mixture. Yeah. Okay. So that says something about our country. And as much as many thinking our economy is not doing that well, Kenyan thinking this is a land of, of milk and honey. The grass is green on this side. So we're having, and what I like to tell our viewers, we have a lot of investors, both local and a lot of foreigners who are buying this property. I guess this trend began around when the borders opened, thereabout.
Yeah, what I can say, there's at the moment, foreigners can be able to come to Kenya without requiring to have a visa. Thanks to the government policies, and that has increased the number of foreigners who want to come and visit there. At the same time, Nairobi is one of those few cities in the world which has a national park. So you find, let's say someone can have a layover in Nairobi, let's say for 2 days, 3 days, just to go and look around at the park. And where they stay?
At the Airbnb
or hotels. So it's a robust market at the moment.
That's a good thing to note. So we were talking about uptake. What else do you say is affecting the uptake of the properties in the market?
At the same time, based on the government statistics, the population in Nairobi and Kenya in general, it keeps increasing. So at such, there's a demand for rental market for these units. So at the same time, apart from there are actually Kenyans who are living in those apartments. And you'll find them in the 2 bedrooms, also families. There are some units, new development that cater for families, like a 3 bedroom, 4 bedrooms, as such.
So there's been this argument. Thank you. I'm glad you brought it up. And the argument has been, who is paying all that amount of rent? So I don't know how to answer that question at the moment, but are we saying that there are actually Kenyans who are able to pay that rent? But how big is that number? So like now, for example, how much are the 1 bedroom and 2 bedrooms going for the new type?
So the new type of 1 bedroom ranges, let's say, because I'm a Kilimani, Westland specialist. So within my neighborhood, I can say it's between 6 million for the 1 bedrooms to around 9 million there.
And I see them renting from 60,000 for the 1 beds. The 1 beds can go to as much as 70. I'm not a Westland specialist, but Kilimani, that's my specialty. I see them 60, 70, hardly 75. And those ones are mostly Airbnbs, right? So most of them are people are taking them up in investors who want to do Airbnb. The 2 beds, the old types, you'll find that Kenyans will take the old types and the 3 beds. But the newer types, people who are renting them out, I'm curious, I don't know from your point of view, is it more of foreigners or more of Kenyans who are taking the new type that are going for it? Because the 2 beds start from 80,000 to 90,000 in Kilimani, Kileleshwa. Who are, from your point of view, who are the ones who are taking them, most of them?
Based on my experience of what I've seen, it's actually a mix
of both.
A mix of both. Because at the same time, you can remember, there is actually some facilities that are offering Kenyans a cheaper mortgage at 9%. So some people are opting to take a mortgage to live. And at the same time, you may find foreigners actually buying and living in this property. So we usually call nomads. We find digital nomads.
Okay. But are Kenyans renting the 80K, 90K?
There are some. It depends. Now, you see, for families, they will tend to go for the older type because of the size. Also, the young family couples who may opt for the newer units. It depends on your taste. Do you want an open kitchen or a closed kitchen?
It is true. Okay, that's just to answer you. Those are some of the questions that people have been wondering. Who's going to rent all these units? Funny enough, there are people renting. I think we'll discuss at the end what how will this price trend keep going?
Yeah.
Okay. Which other question are people asking? Maybe we should discuss about that rental right now.
Yeah.
Yeah.
So at the same time, at the end of the day, when you invest, you're looking for what is your return.
Yes.
And once you get the return, you also want to look at the future.
Yes.
How this return, will it be stable? Will it continue to appreciate?
Yes.
Or how would the market look like in terms of income per annum?
And that's why it's actually, before even you go, that's why we said we can borrow from our experience in the market as a business. We've shared this in our past videos. Our rental yield used to be about 6% average. The high-end market, the very high-end markets like Runda, Karen, will experience less than 6%. But the Kawaida market, the Kilimani clearly show the rental yield by annum has been 6% for many years, at least for over a decade. It was 6%. And then the market started shifting. I don't know what we can share what caused the shift, and the demand increased, and that increased the amount of rental yield that people are able to collect. I think we were talking with you earlier on. Right now we are ranging from what range to what range for rental yields of this 1 and 2 two bed, the new types.
So for the new types, the furnished unit, the return on investment range is around 9 to 10%.
Yes.
At the moment.
Yes.
Yeah.
You see, that's a pretty decent return, eh?
Yeah.
And you're not counting capital gains.
True.
Yeah, we're not counting capital gains. So how does the future look like when you look at it?
Now, that's now the main question people usually have asked, because let's say, for example, you have a 1 bedroom, you bought it at 7 million, and let's say the rent is at some places 70, some places 65. Now you're asking yourself, will I continue earning that rent of 65 for the next, let's say, 7 years? Yeah. Or will it increase? Yeah. So that is the main question people usually ask. So, but back to what you said. Historically, we have been around 6. So, and the uptake of the new units are coming up. Also, the demand is there for the rentals. So,
and there is a conflict going on.
Yeah, there's a
fuel prices going up.
Yeah.
How will this affect the rental market?
Yeah.
To be honest, we've talked to different experts in this space, and no one is certain. No one is certain, because look at how we started off 2020, COVID. Then there was a conflict now, and really, the future is not something we can accurately predict, but for sure there is a pattern we can follow. And there's a pattern it is good to look at the past trends. The past trends has been demand increases, supply increases, and of course rental yield increases. And then when supply surpasses demand, if you look at our other videos, especially the ones that talk about market cycles, the demand starts going down, meaning the rental yield starts going down. You could say it's basic economics, but that's what usually happens. That trend will always be there. We've had a season where we had a period where when we started off, properties were selling at, when we started 2020, properties, and they still went up, properties were still selling at 8,500 shillings per square feet. Basically, that's about almost 20% less than what they're selling right now. Cost of steel pushed the price up, and demand for the properties will push the price up. So during COVID, there are people buying property. Okay, and it was a suppressive time, but it looks like there's a percentage of people, or wealthy people in the world, who are able to buy property even in a downturn. Or there are people who spot opportunities in a country like ours when things are not really good. And so one would have expected that to be a bad season for the developers, but they have continued selling even through COVID. Correct?
Yeah, correct.
So then it becomes very hard to predict how will they behave in the near future, 7 years down the line. But we can borrow from a past experience. They say whatever goes up comes down, then it will just go up again. So I guess for an investor, it would be good to see a consultant like you or myself to just draw these patterns, or to just deduce how, or to predict how this market will perform, and we'll be able to guide it.
Yeah. One thing I can add is there are many factors which affect your investment, how it will look like in the future. And as a realtor, based on the experience which I've seen on the ground, is look, there are many factors. I can give a brief example, like location.
Yes.
You have to take a location that you can see in future will still have that demand.
Yes.
Also the type of project.
Yes.
And the finishes.
Yes.
Also the impact your investment in few years in the future. So it's not only it's a whole dynamic that affects the market.
It is true.
Yeah.
Like, some people may think the older type of units don't have good returns, but we recently sold a unit built in 2008. Yeah. But it was done so well, and the view in the compound and the finishing so good that it's still fetching quite a pretty decent rent. Yeah. So how the developments have done, I agree with you, determines how they look. They'll perform in the future. Yeah. I agree.
Another thing to keep in mind is the management. Yeah. A management of a complex is a big. Yes, it will impact if your rent will continuing be at that price point or decrease a bit. Yeah. Yeah.
In fact, if there's someone there who specializes in management, this is your opportunity to be able to offer a service, a bespoke service that will transform the rental income of these complexes. So that's a big thing. If the property management company is able to maintain good standards, the rent will continue being good and going up.
Yeah, true. Yeah. Now, with all that considered,
yes,
what do you tell an investor who wants to invest? What is the good time to invest?
That's a good question. They say the best time to invest is now. Sometimes you wait for the future and things change. Like now, things have changed. How we started in 2020, whoever bought property in 2020, right now, is selling at, if they sold, they will sell at a higher price. However, the one who bought in 2015 is selling at the same price they bought it for. So you see, at that time, we were at the peak. So the best time is to buy now. Will you say the person who bought at 2015 is at a loss? No, they've been collecting rental income. In 2-3 years, they'll be selling at a higher price. Yeah. So those are some of the things Collins and I were discussing. We like to do these discussions with our office partners and with other real estate agents, who love investments and who love analysis and just collecting data. We do that pretty much because that's what we do Monday to Saturday. We do real estate. We live and do real estate Monday to Saturday. But I'd like to hear your opinion. What do you think?
I believe the right time is now.
Yeah.
Today, actually. Yeah. Because based on what I've seen in the market, if you compare the price per size, let's say the square meters, the price, let's say the price someone buys now, and you compare with the units that are coming up now, you'll find there's a slight variation.
Yes.
So the best time to take advantage is now. Yeah. Because when let's say the price will slightly change, but something that you said developers will be the size.
Yes.
You'll find the size also reduce.
Yes.
As the price try to stabilize.
Yeah.
So you may get a property, let's say it's a 1 bedroom, yet it's 8 million, but you find a previous investor bought their property 8 million, it will be around 80 square meters. But you who is coming later on, you'll find your size has decreased
by 5 square meters.
By 5 square meters, by 10. Yeah. So usually advise clients, the best time is now.
Yeah.
You don't know how the future will look like.
Yes.
If will the unit continue to be smaller or bigger? Yeah. But the time to take advantage is now.
Yeah. And maybe I just want to add as we conclude, I think another thing that gives real estate an advantage is that it cushions against inflation. Yeah. When you put money in a bank and inflation hits the money, take the case of Zimbabwe, what happened to Zimbabwe, and the shilling loses value. If you are renting property then in such a country at, let's say, 50,000 shillings, and inflation hits, the landlord don't expect you to give 50,000 shillings, which probably hit and 50,000 became like 5,000. He'll expect you to give them 500,000. Yeah. The same thing with Kenya. If inflation, or rather with real estate, I see why I love real estate is it cushions against inflation, and as inflation increases, the rent and the prices increase. If the cost of material increase, even the old prices will increase. So the best time is now, because you'll ride with the the wave of how the market is performing. So your capital gains will increase, the cost of your property, a lot of the price of your property will adjust, and you'll also collect rent. So there are two income streams in real estate. Sometimes you just use one, but there are two. There's a capital gain, which you don't realize immediately, and then there's a rental yield. So I think the best time is now, because 2 years down the line, someone will have collected enough rent.
Yeah. What I usually even I can add on top of that is that if you go to the market now, you'll be able to see that people are buying. You may find, in terms of unit that has been taken, you find from 50% and upwards.
Yes.
And you will check the completion of this project is around 2027, 2028.
Yes.
So at the moment, people are investing.
Yes.
So why not you?
Yes. In fact, Collins and I are arguing, is it some projects, we're saying it's safe to say 50%, but there are projects that they are completing 2027 and they've almost sold out. Yeah. But just to be safe, let's work with the 50%. You don't want to miss out.
Yeah.
Thank you. And if you have any question for us, please feel free to leave us a message or to contact us in the contacts below. You can visit our website. Our website is listed beneath this video, and you can reach out to any one of our consultants and just come and meet us. Let's discuss your investment and your future. Thank you very much.
Thank you.